It's a gripping message that will send chills down your spine. Let's delve into the world of renowned financial expert Robert Kiyosaki. Brace yourself as we uncover the shocking truth about the impending crisis and its potential impact on your hard-earned money. Get ready to have your eyes opened and your financial strategies redefined. This is Robert Kiyosaki's last warning, and it's time to take action. Robert Kiyosaki is an American entrepreneur, author, and motivational speaker, known for his book, Rich Dad, Poor Dad. He was born on April 8, 1947, in Hilo, Hawaii. Kiyosaki's work primarily focuses on personal finance, wealth creation, and financial literacy. Rich Dad, Poor Dad, published in 1997, is Kiyosaki's most well-known book. In it, he shares the financial lessons he learned from his two fathers, the first being his actual father, the poor dad, who had a traditional job and struggled financially, and the second being his friend's father, the rich dad, who was a successful entrepreneur. The book emphasizes the importance of financial education and challenges conventional thinking about money and wealth. Kiyosaki has since written numerous other books, including Cash Flow Quadrant, Rich Dad's Guide to Investing, Rich Dad's Cash Flow Quadrant, and Rich Dad's Increase Your Financial IQ. Kiyosaki gained widespread recognition through his immensely popular book series, Rich Dad, which began in 1997. Since then, he has successfully transformed it into a comprehensive brand, encompassing books, seminars, and audio materials. Even today, Kiyosaki continues to write and share his insights. In 2017, he published two books, Why the Rich Are Getting Richer, and More Important Than Money, An Entrepreneur's Team, which expands upon concepts explored in his Rich Dad series. Additionally, Kiyosaki created a board game called Cash Flow 101, designed to educate individuals on money-making strategies and escape the financial limitation cycle. The game is available in physical form and can be accessed online and through a mobile app. In the wake of the pandemic, Kiyosaki has expressed concerns about the overwhelming debt burden weighing on the United States and has offered advice accordingly. While Kiyosaki's teachings have gained popularity and have inspired many individuals to take control of their financial lives, it's important to note that his ideas have also faced criticism and skepticism. Some financial experts argue that his advice oversimplifies complex financial matters or lacks solid evidence. In addition to writing, Kiyosaki has built a brand around his teachings, offering educational programs, board games such as Cash Flow 101 and Cash Flow 202, and seminars through his company, The Rich Dad Company. He has also appeared on various television shows and has been a sought-after speaker on personal finance topics. Robert Kiyosaki, the author of the best-selling book Rich Dad, Poor Dad, has warned that banks may seize all of their customers' money in the event of a financial crisis. He has urged people to take their money out of banks and invest in gold, silver, and Bitcoin assets. Kiyosaki's warning is based on the fact that banks are not insured against losses caused by a financial crisis. In the event of a crisis, banks may fail, and their customers may lose all of their money. This is what happened in Cyprus in 2013, when the government imposed a bail-in on bank depositors. Under a bail-in, depositors are forced to contribute their money to bail out the bank. Kiyosaki believes that the United States is headed for a financial crisis, and that banks may seize all of their customers' money. He has urged people to take their money out of banks and invest in assets that are not insured by the government, such as gold, silver, and Bitcoin. It is important to note that Kiyosaki is not a financial advisor, and his predictions should not be taken as financial advice. However, his warning is a reminder that banks are not always safe places to keep your money. If you are concerned about the possibility of a financial crisis, it may be wise to consider investing in assets that the government does not insure. It's important to note that the following explanation represents the perspective of Robert Kiyosaki and is not necessarily an objective view of the situation. While Kiyosaki may have expressed concerns about these issues, it's crucial to consider multiple viewpoints and consult reliable sources to comprehensively understand the economy and financial markets. Number 1. Money printing and inflation. Kiyosaki may argue that excessive money printing by the Federal Reserve can lead to inflation, eroding the dollar's purchasing power. If inflation rises significantly, the value of people's savings and investments can diminish. This, in turn, can affect the stability of the financial system. Number 2. Government debt. The US government's substantial debt levels may be a cause for concern for Kiyosaki. A high debt burden can potentially strain the government's ability to repay its obligations, leading to economic instability. If investors lose confidence in the government's ability to manage its debt, it could lead to higher borrowing costs, reduced investment, and potentially a financial crisis. Number 3. Overvaluation of the stock market. Kiyosaki may argue that if the stock market becomes significantly overvalued, it increases the risk of a market correction or crash. An abrupt decline in stock prices can have ripple effects throughout the economy, affecting investor sentiment, consumer spending, and overall economic stability. Number 4. Overvaluation of the housing market. Similarly, if the housing market experiences an unsustainable increase in prices and subsequently crashes, it can have significant repercussions. A housing market crash can lead to decreased consumer wealth, increased mortgage defaults, and potential disruptions in the financial sector if institutions have significant exposure to real estate. It's important to note that economic forecasting and predicting financial crises are challenging, and many factors contribute to the economy's overall health. While Kiyosaki's concerns may reflect potential risks, it is advisable to consider a wide range of expert opinions and analysis to gain a more comprehensive understanding of the economic landscape. Kiyosaki believes that all of these factors are pointing to a financial crisis in the near future. If he is right, banks may seize their customers' money. He has urged people to take their money out of banks and invest in assets that the government does not insure. Robert Kiyosaki, the author of Rich Dad, Poor Dad, has recently raised concerns about the US economy and the banking system. The book, co-authored by Kiyosaki and Sharon Lechter in 1997, has enjoyed tremendous success, remaining on the New York Times bestseller list for over 6 years, and selling over 32 million copies worldwide in multiple languages. Kiyosaki advised caution and expressed skepticism towards statements made by President Biden, Federal Reserve Chairman Powell, and Treasury Secretary Yellen. He encouraged individuals to think for themselves and not unthinkingly believe official pronouncements. Many individuals on social media supported Kiyosaki's views, including economist and gold enthusiast Peter Schiff, who warned of an imminent banking crisis due to past monetary and fiscal policy mistakes. Schiff believes that the US banking system was insolvent and suggested that the current financial crisis could result in a significant bank run, surpassing the magnitude of the Great Depression. Schiff's concerns were sparked by a tweet highlighting a substantial decline in bank deposits, which has dropped by $79.2 billion in the past week, the largest decrease since March 22. The unadjusted drop was even greater, amounting to $86.6 billion. Kiyosaki has issued repeated warnings about the potential failure of banks, both in the United States and globally. In April, he expressed concern about the Federal Reserve's impact on regional banks in the US, claiming that their support for larger banks like JP Morgan Chase is causing the destruction of smaller regional banks, which he considers vital for the country. He pointed to the failures of several major banks in March, including Silicon Valley Bank and Signature Bank, as examples of this trend. His warnings about the economy extend beyond the United States. In February, Kiyosaki cautioned that the world economy is on the brink of collapse. He predicted events such as bank runs, frozen savings, and bail-ins, which involved the use of depositor funds to support struggling banks. Thank you for joining me today to explore the pressing financial crisis issue. Remember, knowledge is power. Stay informed, stay vigilant. For more of such interesting videos, like and subscribe to us.